The IRS is reopened, the revenue officers have sharpened their teeth, and they're coming at you with a vengeance right now after a 40-day layoff, and they're well rested. What does this mean for you if you owe the IRS money? Your case was assigned to a revenue officer, and the revenue officer took some form of action before they went away. We're going to answer some of those questions right now. I'm Mike Mellace with Pink Harbor CPA.
And I'm Josh Webskowski with Best Tax Pro. Hope to help you answer some of these questions, Mike.
So let's break it down. Right before the revenue officers went out, what did the revenue officers do right before that last day in the office? Did they send early Christmas presents to the taxpayers, Josh?
No, there weren't any early Christmas letters sent out. What they did was they took aggressive actions. They filed liens and levies, and in several cases, they garnished wages on taxpayers. And the reason why was they wanted to position themselves in a place of power. These are cases that have been in their inventory, and they want to get rid of them so they get new cases, because new cases come in every day. But Mike, do you think taxpayers are being used?
Oh, absolutely. See, I think the real reason why the IRS did this is because they were using the taxpayers as political pawns. Because what happens when a taxpayer gets a letter in the mail? They're either going to try to call that up and resolve that themselves, or hire a professional like us to help that resolve. So now that taxpayer comes into us, and what's our responsibility? The IRS is shut down. How much can you and I really do during this time period of a shutdown?
There was absolutely nothing that either one of us could do. If you wanted to go to the taxpayer advocate, or if you wanted to go to the independent office of appeals, separate from collections activity, no, there was nobody there answering the phones. So they were operating on a skeleton crew.
Very, very little to be done. So instead of the IRS acting like Santa Claus, they were the Grinches they normally are. Now what happens is we would advise you, we still need to file for what we call question due process hearing, or some type of appeal to what the revenue officer. But before that, let's talk about why this happened and how the taxpayer was used as a pawn in this. The taxpayer gets the letter in the mail. They come to us and we say, look, very limited things that we can do. Hopefully the shutdown opens up sooner rather than later, where they're back to work again. Now the taxpayer gets frustrated. They need this wage levy to go away. So the taxpayer now contacts their member of the House of Representatives or the Senate and says, I need this shutdown over. The taxpayer becomes a political pawn to end the shutdown. Wouldn't you agree, Josh?
Yeah, and there's a lot that goes into that, but what the taxpayers did or didn't do before the shutdown really matters a whole lot more, because in many cases, people received a notice of federal tax lien, CP 504 letter, a 1058 letter, that there's going to be a lien on your property in a certain period of time. And if within that period of time you don't respond, there are certain things that inevitably happen. What do you think this would be, Mike?
Well, I think what you need to do is you get a letter in the mail and you contact a professional, you write the appeal letter. Now, when the revenue officer gets back into work, the revenue officer is going to see a request for a question due process hearing, or they're going to see a request to stop the wage levy. All those things need to be addressed in a very quick, timely fashion. So I have all the things the RO has to do in one pile of the desk. The other pile of the desk, we have all the people that didn't write any letters in. So now we're going to talk about enforcement of the collection. Talk about that, Josh, what actual enforcement means.
Actual enforcement is the IRS coming after the money that they feel is due to be theirs. So the way they establish for that is through sending out notices to you. And if you don't respond to those notices, they're considered substantially correct. So there's a tax liability that's stated in a letter, and the IRS wants to collect. That's their job, to ensure that the correct amount of tax is paid, which may not always be correct. Mike and I have found that a certain percentage of those letters that get sent out to taxpayers really don't contain the actual tax liability. In fact, are in many cases erroneous. What do you think about the percent you're seeing, Mike?
I think less than 20%, I'm doing this 32 years, less than 20% of anything that I get from the IRS actually reflects an accurate balance. 80% of them don't. So for the viewers out there that are watching our little episode right now, thank you for joining us. Please don't think as a taxpayer that owes money as being, well, they're a deadbeat taxpayer. Whatever they had coming to them, they should have coming to them. The IRS knows many, many, many of these numbers that they send out are wrong. And that's why they hire people like us to represent them. Everyone should pay their tax liability, but the true and correct tax liability, not made up, puff the magic dragon numbers. Would you agree, Josh?
Exactly. And the way they do that is they'll send out a letter that establishes the tax liability based on the income documents that have been submitted to them. For example, W-2s and a 1099-R. If that happens, what the IRS will do is they might cause what's called a substitute for return, or SFR for short. And on that SFR, they will create a tax return that's all made up. It's not an actual tax return, but it counts as a tax return for the letters they sent out. And it shows that that individual is not married, filing joint, but they're single. So they have a lower standard deduction. And then they have all of this income with a lower standard deduction and none of the other benefits of being married in terms of before 2017 exemptions or that higher standard deduction. And they're left unaided and they owe all this tax.
So, what this means for you, if you were a taxpayer or a business that had enforcement action that was starting with the IRS, what we expect to see is those of you who had letters that are now pending in the system that need to be responded to. We're expecting that aggressive collection activity portion of that to slow down. But what about the other bucket when the IRS sent out the notice of lien and there was nothing responded to it? What do we expect to see there, Josh?
I think we can expect to see aggressive actions and the IRS taking things into their own hands with batch processing. These are, after all, cases that there was activity that was anticipated, that the taxpayer was given an opportunity to respond to, and that even though the government was shut down, those timeframes that are legally established to respond to on that letter based on the date at the top of the letter, if you don't respond within that time, that piece of law still continues to exist whether the government is shut down or not. So those cases have been pushed forward. So there will be either more office visits, more field audits at work, or they're going to really take more aggressive action more quickly, and they're going to do it in a bulk process. They'll keep with the law, but they're going to want to get these cases out of their inventory as quick as possible because nobody complied with their opportunity to challenge the IRS.
Bottom line, really important. If you had a case that's ongoing right now with the IRS and you had some activity happen right before the IRS shut down, you need to pick up that phone and call a tax professional right now to have them represent you. You can call myself, Mike Mellace at Pink Harbor CPA, or you can call Josh
At Best Tax Pro here, 763-477-4205.
And I'm Mike. You can reach me at mike@pinkharbor.com by my email or go to pinkharbor.com or 856-226-9524. If the IRS is against you right now, Josh Webskowski from Best Tax Pro, Mike Mellace with Pink Harbor CPA, we are on your side and we will take aggressive action to make sure that you are protected against the IRS. Thank you for watching this episode.
If you're the guy that wants to say game on IRS, call Mike or me.